The Treasury bills market ran bullish this week with particular interest in the long-dated papers. Traders at UBA believe the momentum may not be sustained going into the new week. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me for this discussion. Chuka, thank you for taking time out to join us today. Well, you said that momentum may be short-lived. Bring us up to speed. Let's start with market highlights so far this week.
Okay, thank you. Like you mentioned, liquidity has been extremely robust. We've seen system liquidity between 850 billion to 1.4 trillion. That has actually affected the yield in the fixed income market. We've seen, like you mentioned, the one-year paper, which printed at the last NTB auction, 6.2, is currently trading around 4.8 levels. We've also seen huge decline in yield on the bond side. For example, the 2053, which came out at 15.7 at the last bond auction, is currently trading at 14.5 levels. So liquidity has really driven activities in the market, and this probably will continue going into the new week.
Now, just thinking about, I know I've asked you this question the last time, I believe it was yesterday, how low these yields could go. But I'm just thinking, I want to believe we've been here before, going back into the history of the market. And the market is in cycles. But do you see a time where this could, change? And then, or at what point, or what would be that kind of catalyst to change the way the market is right now?
Like you mentioned, that precisely 2.5 years ago, we've been in this sort of situation. We saw 1 year at that time, close as low as 1.5, 2% levels. As at when, I think it will abate. As long as this current government continue with the reform, the CRL regime, that was hurting the banks initially, previously, has slightly been moderated, and so banks are, have the more confidence to do, to play around with liquidity, and so the system is going to continue to be liquid due to monetary policies, and then of course fiscal policies, which is being employed by the current government. And so the current government believes in interest rate, low interest rate, and that will continue to put more money in the system. However, we probably will have to contend with inflation within the short time, but if you want the economy to kickstart, then this is the way to go.
Now, what are for the bond market, the most attractive papers at this time? Is it more on the, give us an insight across the yield curve?
Yeah, the most attractive papers are usually the longer end, the 2037 with a coupon, very attractive coupon of 16.25, and then the 2049 as well as the 2053. But then this week we've seen a lot of interest on the shorter end as well, 2026, 2027. That is because the yields, you rather just play on the shorter end of the curve for the bond market, in the bond market, than which the yield is slightly higher than the 1-year Treasury bill. So ordinarily, people who would have buy into the 1-year Treasury bills, are actually the players we see at the shorter end of the curve in the bond market. And so this, for me, will continue as long as the system continues to be liquid. A lot of interest will be on the fixed income market.
Now, my mind just went to the Eurobond market. Just wondering if there's any notable movements there, and just also if we could use what's going on there to sort of gauge how investors feel towards Nigerian debt instruments at this time.
There hasn't been much activity on the Eurobond market. That is because a lot of investors are still waiting to see how the direction the government will go. Permit me to just speak briefly on the FDI inflows. because also affects the euro bond interest. So though there was a report by the World Bank 2 days ago about the Nigeria FDI, recording a negative $187 million, as against other African countries. For Egypt, for example, had over $11 billion FDI inflow last year. This is because of the policies, especially the FX restriction. So my point is, as long as this current government continue with this reform, especially the free flow of FX, confidence will start coming in, and then we'll see these FDIs, gradually, come into the market with a lot of inflows, and the economy will kickstart as soon as earlier than we expect.
Okay, before I let you go, just a closing rate for the Naira to the dollar today at the INE window.
It's currently trading at 763, 764 levels. Yeah.
All right, thank you so much, Chuka, for your time today. Chuka Nwachukwu, Head ALM and Balance Sheet Management at UBA.